Welcome to the Family Banking Show with your hosts Rob, Derek, and John, where we dive into the world of the infinite banking concept and discuss personal banking strategies to secure your legacy and build generational wealth. We're glad you're here, and we hope this episode serves you well.
Welcome back, ladies and gentlemen, to the Family Banking Show. We are your hosts, Derek, Rob, and John. Guys, how are you doing this week?
Good. How are you?
Things are going well as we're gearing up for Thanksgiving. We want to just say happy Thanksgiving to all of our listeners and to their families. Thank you for trusting us and listening to the podcast over the last several weeks or months. And we certainly do wish that you celebrate Thanksgiving well with your family. John, how's it been going this week for you guys?
Yeah, it's going well. We're leaving tomorrow actually to San Antonio, Texas. That's where I grew up, and escaping the snow. It'll be like 75, I think, and yeah, we'll be there for quite a while actually. Get some time with the grandparents for my kids, and yeah, lots of fun family events going on, and I miss the delicious Mexican food and
Yeah.
enchiladas and everything that I know my family's gonna cook. So I'm like already kind of salivating thinking about the trip. So it'll be fun.
Yeah, it's such a special time just to be around people maybe that you don't always get to see in a
Mhm.
regular basis, extended family, and just to catch up and share stories of, God's faithfulness and how things have changed in your life over the last however long it may be. Guys, this week we're diving back into their faith and finance series, and we're gonna kind of maybe rattle some cages a little bit here and talking about the borrower being slave to the lender, which is, of course, a quote from Proverbs 22, verse 7. This is something that's been kind of trademarked, if you will, or it feels like it has been by a certain financial professional. We'll go ahead and name drop. It's Dave Ramsey. If you're unaware, this is a verse that he loves to quote and emphasize to his clientele. Why does it make sense for Dave Ramsey and the particular people that he works with to maybe emphasize this verse? Why does it speak so boldly to them and, resonate really well for people?
I think it helps to start with understanding his application of the verse because it is scripture, it is God's word to us. So I think in any case we believe in it and we trust it. We just disagree with the application. We disagree with what that actually practically looks like for everyday families. We don't think that you should just cut all credit cards. We don't think that you should pay cash for literally everything and that you're potentially in sin for taking out a car loan,
Yeah.
right? We don't think that, right? That's kind of the application that the Dave Ramsey world has drifted into, in my opinion, that causes fear, that causes scarcity. And I think it does instill a good level of discipline to not just go out to a shopping mall and max out your credit card and then just leave it there and get into tons of bad debt. I think we can talk through in this episode just good versus bad debt. But certainly, I don't think this passage is telling us that all debt is bad debt and that all debt makes us, the borrower, slaves, by design. I think there are contractual obligations that we have to repay and different things like that, but certainly doesn't make us a slave. And there's really good use cases for getting into debt. And I do think even the people that teach to cut your credit cards and to never get into debt probably practice differently and have debt themselves. So, yeah, I just think the application and the practical output of this verse is where we really do differ.
Yeah, I think what our listeners will see is maybe a little bit of a contrast between, different perspectives between what Dave Ramsey and his group really tries to emphasize. And, we're offering just another alternative, a different way of thinking about things and thinking about finance. But I do have to give his team some credit, especially for my relationship and on starting our marriage as young adults. It was really helpful to get some perspective on personal finance because it wasn't something that was intuitive to us. It's not something that was taught to us in high school or even. And so just to prime the pump as a young adult and starting to think about the value of saving and the value of budgeting, not spending above your means and kind of living frugally, if you will, for at least a period of time was really helpful for us because it got us out of a lot of student debt, which was relatively high interest, in my opinion, 10, 11, 12%. That could have, hung over our heads for a long period of time, but we kind of buckled down and for a period of time paid off that high interest debt. But you don't know what you don't know when you're young or even when you're old. So it wasn't until several years later after that I came across infinite banking and saw the value of it and what it could do for me and my family. And so hopefully our listeners are starting to realize that value and think of, is this really a better way forward than just paying cash for things? Of course, when it comes to a mortgage, there's very few people that would just save up in order to pay cash for their home. They'd be waiting a long, long time to get into that home, it appears. And so it's going to come down to each individual family member's values and mission and goals of what they want to do in their future and how their personal finances play into that. Rob, tell us a little bit about this alternative of becoming your own banker and how it differs maybe from the context of this verse, and how might we still apply this verse to becoming your own banker?
Well, this verse, the rich rule over the poor, and the borrower is slave to the lender. It just makes me think of one of the previous episodes we talked about where it's just I don't think we realize it, but every time we finance something, we are beholden to the terms of the lender. We have to pay them back on schedule with interest on their terms. And, so over the years of practicing infinite banking in my family's life, I like to say that phrase, the days feel long, but the years are short. You start with where you're at, but then pretty quickly you're like, wow, we have quite a bit of cash value built up here before you know it. And, we needed, we didn't need, but we decided, to purchase a pontoon because my wife's family lives out on a lake. And it dawned on me that I went and purchased a pontoon and I got the title. And I own the title. I own the pontoon. I'm the owner. The bank doesn't own it. I'm not beholden to the bank to pay the pontoon back on their terms. I'm not beholden to the lender. And it's just this epiphany that I can set my own payback schedule. As a matter of fact, we had some economic kind of turbulence, as everyone knows, in the last 2021, 22, 23, 24. It's like work compensation changes, it fluctuates, and during those periods, I didn't pay my pontoon back, so I didn't have to pay it back. I just pushed it out 6 months or whatever it took for me to kind of ride that storm out for our family. And then now I'm back on schedule and, I can catch up or I don't have to. Like it's the banker does what he wants. And I think that's such the important thing to realize is that when you create this system using correctly designed high cash value permanent life insurance, you build up enough cash value, you can start making decisions that free you from the lender, becoming your own banker. So it really is a powerful, it's the control, the freedom, the guarantees that you get. You just don't quite understand it. It's caught, not taught. You just don't quite understand it until you start to do it. And it really is eye-opening.
Mm-hmm. Yeah. And I was thinking of, this value of having an infinite banking policy and that ability to take out loans as needed. But John, talk to us a little bit about the value of having a plan in place for paying back those policy loans. Why is that significant? And how can we still apply, this idea of the borrower being slave to the lender and the importance of paying back those policy loans and having a plan?
Yeah, I mean, you in infinite banking, you are both. You're the borrower and you're the lender. You're lending to yourself. And like we've talked about in many episodes probably already, that you want your own bank, your family's bank, your generational asset to be profitable, right? You are, say, loaning out for this pontoon, and if you don't pay it back, your bank doesn't profit, right? If you, even though you do have the option, and say there are some strategic ways to structure policy loans to where you don't pay it back and having that plan in place. But like you said, Derek, the point is having the plan in place for your own side hustle, your own business, your own family bank to profit. And not only do you, the policy owner, profit, but certainly the many generations to follow will profit. Not only in form of like higher death benefit, most likely, but also in the form of these fundamentals and disciplines of being an honest banker, not stealing the peas, and teaching those generations to repay, as able. So anytime you repay, and yes, there is some actual interest that you're paying to the life insurance company in these policy loans, it all comes back to you in the form of dividends, right? And we get those dividends tax-free based on the profitability of the life insurance company, and just make the policies even better, right? The better the life insurance company does, the better we do as policy owners in this mutual company format. So having those plans in place, whether or not you pay for it and whether or not you pay for it immediately, is absolutely vital. That's what we're here for. We can coach you through maybe setting up an amortized schedule if you want, and just having that as like a discipline, at least structure or framework to work off of. Or you could just know that maybe you get bonuses at the end of the year. Maybe you get, different windfalls. You can plan for that and have tons of outstanding loans. And then say you get an inheritance from someone in the family that passes away, then that's a plan, So that's a long answer for just saying having a plan is important. Being profitable as your own family asset is important for many generations, not just for your own life.
Yeah, I like that. Having, being able to have the flexibility to control the repayment schedule, but still recognizing the value and the need of having a plan in place to pay back those policy loans is still really critical. Because you can get in danger. Your policy, your banking system can be put in danger if you don't have at least some semblance of a plan of repaying policy loans. A policy could lapse, meaning that you will lose the death benefit coverage. You've given up your ability to really become your own banker at that point. Let's just talk a little bit about this idea of paying cash. I mean, obviously we've talked about it before in other episodes, but here just emphasize, hey, that makes a lot of sense, paying cash for things, but there's an opportunity cost too. So talk to me, Rob, a little bit about that opportunity cost.
Well, and just in a basic kind of definition of opportunity cost is if you go through becoming your own banker, Nelson talks about EVA, economic value added, and it's, money is either making you money or losing you money. It's costing you interest or it's gaining you interest. And so if you want to pay cash for everything, you typically have to have it in a savings account. Historically, savings accounts have not returned that great a return on your money. Oftentimes almost zero. And recently it's been higher. But you could argue that money could have been better positioned somewhere else versus sitting as cash in a savings account. It'd be gaining more interest in some other opportunity. And then what's cool about permanent life insurance is that you can put that that cash you would have been saving in your savings account, put that into your policy. It's growing at as good or better than almost any of the savings accounts you could access today. But then you can also leverage it for opportunities, emergencies, whatever you need, and it still continues to grow because you're not actually breaking the compounding by removing the cash. And so you can take advantage of opportunities, and you're not losing that opportunity cost isn't affecting you as much. It's just a smarter, more efficient way to store your cash. I think it's the simplest way to talk about it.
Yeah.
One thing I want to talk about too, we were talking about paying off, not having any loans, not being beholden to lenders. But there are times when it might make sense. For example, a house. Almost none of us can afford to just pay cash for a house. If you could, that potentially, would be not a bad idea, because the way mortgages are amortized, all the interest is paid off on the front end. So, but for the most of us can't. So we have mortgages. For all of those folks, and this is like a relevant example, for all of those folks who might have been deciding, I'm going to follow the Dave Ramsey path and just pay off my house as fast as possible, double up my payments, and you happen to be, unfortunately, living on the East Coast and we get hit by a hurricane, your house is now gone. You don't have any house. You don't have any house payment, but now you don't have any cash. And a wiser move might have been, instead of doubling up on your mortgage, take that double, put it into something that can't be destroyed by a hurricane or a fire or some other natural disaster, so that you have that fund growing that provides death benefit, that provides liquidity, that provides guarantees. Guarantees is such an important word in control. It's just another way to think about it for all those folks who are just so focused on paying off all of their debt. Pay off all the bad debt. That's no question. But if you have a house, if you have debt that is at a low interest rate, you could make a strong argument there might be better ways to long-term think strategically about where to put that extra cash flow into a place that's guaranteed, that you can still leverage fund, that protects your family, that is useful in so many other ways. I just think it's an important point for people just to consider how to do it strategically in the smartest way possible.
Mm-hmm. Yeah, absolutely. I mean, just our personal financial journey right now, as we're considering taking out a policy loan to purchase a new vehicle. And, it's just a different mentality of, well, do I want to pay off, which debts do I tackle first, or when do I take out policy loans? And being able to have that freedom and flexibility just gives us a lot of, breathe a sigh of relief, knowing that we're in a position of control because we've stored up a place of strength. We've built up our reserves inside a whole life insurance policy, rather than it being dwindled away in a commercial bank or inside our house.
And Rob, that's a really good point. When thinking about mortgages and particularly like what were to happen in a natural disaster, but also and maybe this is an example of potentially being a slave to the lender. Maybe we can get into other examples of how, definitely this passage is true. Mm-hmm. And I've heard of stories recently, actually, that during the 2008 recession, people who had owned their houses for say 355 months, but then just legitimately had no other way to pay off their mortgage. They had just completely been upside down. They only had 5 months left probably of paying off their home completely, and their house was foreclosed on. And you don't get any of those dollars back. You worked so hard over 29 and a half years to pay it off, and yet you could still be foreclosed upon, right? Anytime you do get debt, there should be a lot of different contingency plans and just different ways to understand how actually you're going to repay this in worst case scenario. And what we like to just teach is building plans, building a setup that succeeds under any circumstance. that gives you total liquidity, that gives you just lots of flexibility, control, access, guarantees, and liquidity. So, in a case like that, it's just devastating to think about someone who's just worked so hard their entire life, working lives probably, just to lose their home almost at the finish line. And that is a tangible, real example of how you can be a slave to the lender. What are some other examples y'all have run into?
Real quick, John, I was gonna say that just reminded me too that I've heard someone talk about this that I never thought about it this way. It's food for thought. Is a house that is almost paid off more or less attractive to a bank to foreclose than one that still has a lot of debt that the bank is funding? So if the bank had to pick two houses to foreclose, do they pick one that's paid off, almost paid off, or do they pay one that isn't, has years and years and years to be paid? I never thought about that way, but just something to think about. Just food for thought. That struck me.
Yep. No, that's good. Yeah, I was thinking of even, other forms of bad debt, right? Of just obviously credit card debt is through the roof. Like we're at historic highs of credit card debt, and somehow people are still managing to make those payments and pay off their credit cards, and good for them that they have that. But just, I've run into scenarios of people $50,000-$60,000 on a credit card, and it's like, boy, at 22%, like that's you're being crippled. That's what it means to be slave to the lender. Is you have no way out, really. For many people, money is so tight, inflation's so high, and you've worked your way into really bad debt, and you can't find a way to get out.
Yep.
So
at a broader scale, I think this speaks to potentially a big problem that our country is going to run into is the national debt.
Yeah.
And much of our national debt is just bad debt, and we're getting to in the trillions of dollars in just interest payments every year.
Yep.
And how much our country's budget and the need most likely to increase taxes, and ideally, we'll see, but to decrease spending, but that is going to pose a huge significant problem for our country, however you slice it, right? Whatever side of the aisle you're on, like our spending has become an issue, especially here in the next 20 or 30 years, that we're going to see, interest become our entire nation's GDP, even at a certain point. It's probably not GDP, but more revenue. But that's certainly something that I think has really run away from our nation's leaders, and the future generations are probably going to have to bear that burden throughout their working lives, unfortunately.
Yeah, it's not common knowledge, I think, to most people walking down the street. But if you go on to U.S. debt clock, they've calculated what each individual working U.S. citizen owes in the form of the national debt. So yeah, we're $3 trillion something dollars, and I don't know how many more, but whatever the number is. But what I do know is we're north of $200,000 in debt per working individual, per taxpayer. And so, I mean, most people, they think they're say again.
Our country is 35 trillion in debt.
Thank
right
you.
now.
Yeah. And just thinking of, many people think, okay, your biggest expense in life is going to be purchasing a home. And that's largely been true. But servicing the US debt in the form of each individual's taxes or through inflation is right there up next to your second largest payment right now is going to be in that future owed form of debt to the US government. And, obviously without some drastic reform, that's not going away anytime soon. And it seems to only be getting worse. Guys, talk to me a little bit about, how does somebody get from being a slave in the current scenario to becoming a ruler? What's that transition got to look like, and how does IBC and family banking play into that transition?
Yeah, I mean, to pay a tribute to a couple legends in the infinite banking world, Mike Everett and Chris Bay, it's turning outside, consumer commercial debt into inside infinite banking debt, or policy loans. And that's a huge that's a huge benefit to have, and it takes time, right? Like over time, you're going to start absorbing probably the worst debt, like consumer debt, or uh, things that are taking up a big chunk of your cash flow, and slowly but surely trickling it into your own banking system, from which you can then make an actual plan, like subject to your own terms and not another
Mhm.
bank's terms or lender's terms, and become, like you said, I like that word, the ruler of your own debt. The yeah, the accountability is all on you, the banker, not some other outside banker who's just wanting to make a profit off of you. That's really the sole incentive. And for you to be the banker, you want to make a profit for your family and for your future generations.
Mhm. Yeah, I was even thinking of, just this idea of the side hustle of having alternative sources of income. Increasing your income is a great way to start transforming, from being slave to ruler. Having that additional income, but then you still need to have the ability to save that income, that extra income that you've earned, to pay down that other debt. Or to save it inside an IBC policy to then, as John has said, kind of recapture, go from bad debt to infinite banking debt. That's another great way to transition from slave to ruler. Rob, any thoughts there on that topic?
No, yeah, you guys just laid it out. I mean, just start where you're at. Look at where your cash flow is going. Start sequencing it through a high cash flow permanent policy. Those are the first steps of that transition, moving that outside debt into inside debt. He also had the thought too, if a debt that you move inside that you never have to pay off, is it actually debt? It's interesting. You want to pay it off because you want to be an honest banker, but it's technically it's not on the books, publicly as any debt anymore. That's one of the beauties of it. Your debt income ratio improves by moving your outside debts into inside debts. And so it's just one of step one of making that transition from slave to ruler of your own financial world, your family banking system, is set up a permanent whole life policy, high cash value policy, and start sequencing your cash flow through there. And that's step one. You get the protection, you get the guarantees, you get the control, you get the freedom. And that is the first step to breaking free and becoming the ruler of your own finances.
Have you ever heard the phrase, someone knocking on my door, as though it's a bank knocking on your door asking,
Mm-hmm. Yep.
call and pay back?
Yep.
Yeah, there's a moment that I continue to think so vividly about is when I was talking to my wife when we were first discovering IBC and figuring out what works for our family, and maybe restructuring debt to be from outside to inside, and then create a plan to repay ourselves. Um, my wife was like, "But I don't want any debt. Like I don't want anybody knocking on our door, like, you know, asking for minimum payments." I'm like, you just revealed the beauty of it. No one's knocking on your door. Like it is like your debt to figure out and handle. Like you can knock on your own door, I suppose, but you know,
Mhm.
nobody's gonna do it. I know there's an old show that is just totally dramatized, I believe, but it's called Repo, where people are getting their cars repoed and
Yep.
repossessed, and because they can't pay it back or other reasons. But none of that like drama has to be in our own lives. Like we can control that and just wisely steward what we have and control the repayment period. And the last thing I'll say, just like in this whole conversation, is that there is like very, very little moral significance to getting into debt. Like I think there are some ways that maybe there's like a sin issue of you spending too much, and maybe gluttony, or maybe something else where you're just like constantly spending and getting into debt. And there's certainly like ways to address sin in that case. But like in these circumstances of good debt, and particularly like infinite banking context of creating our own system to control the debt, there is no moral, like, significance or moral, like, negative connotation or attachment to getting into that type of debt. I've heard many people actually, like, throughout talking to different Dave Ramsey followers, honestly, who will say, like, sorry, like, that doesn't follow, quote, Dave Ramsey's biblical principles, like as though he has like his own translation of the Bible or something. But I just think it's potentially deceptive to attach sin or some sort of like moral significance to getting into debt. And I just think it doesn't have to be that framed in that light. Like, yes, maybe if you're overspending and there's a sin problem, then yes, address it. But otherwise, I don't think it should be seen in that light. And that's a hot take, probably. I don't know if y'all even.
I agree with that. Totally.
All right, guys. Well, this has been a very, I think, helpful episode and thought-provoking, I think, for our listeners to consider, this value of becoming your own banker, having your own family bank, and really becoming ruler of your debt rather than a slave to debt. Guys, once again, just want to say happy Thanksgiving to you and your families, and to our listeners. And if our listeners are interested in learning more about becoming their own bankers, they can reach out to us at thefamilybankingshow@gmail.com, and we'd be happy to schedule time to meet with you. Guys, we will see you in the next episode.
Thank you for joining us. If you're interested in a conversation about anything we've discussed, you can find our contact information in the show notes below.
And subscribe, follow, and leave a review to help spread this message and to help families across the country discover the generational blessing of IBC. May God bless you, and we'll see you next time.